Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is my friend Keith Weiner, founder and CEO of Monetary Metals. Keith, thank you so much for coming down to Wall Street Silver.
Thanks for having me, Ivan. How are you?
I'm doing really good. It's Christmas season. I wanted to bring you on to just talk about, what's for gold and silver. We're going right into 2025. So I wanted to, pick your brain. Where do you think we're going and or what is your outlook and your feeling for gold and silver for 2025?
Longer term, nothing's changed for me. I think we're in what people are going to call bull markets for the metals because it's really a bear market for paper currency.
Right.
However, since the last time we spoke, I have to say, so monetary metals calculates what we call our fundamental price, which is a model. All models are wrong. Some models are useful. We think this model is useful, but take it with that shaker of salt. Um, we have a model to calculate what we think the price would be if we back out the actions of the speculators who can use a lot of leverage and hence push the price around at least temporarily in the short term. And I think the last time we spoke, we were looking at a fundamental price of gold just a bit under $3,000.
Right.
It's now just a bit over 2,600.
Hmm.
So just a little bit above market, but not a lot. And it's really dropped in the last week or two.
Why do you think that's so?
So what we're measuring is essentially how the price moves, or rather, while the price is moving, how the basis moves. So the
Okay.
basis is the spread between future and spot, and there's a whole heck of a lot of theory that I spent years and years and years writing about. But essentially, um, think about the grain market. Suppose you were interested in buying a whole truck full of wheat.
Right.
And I'm not a big follower of the exact timing of the wheat market, but it's obviously produced seasonally. And I believe that the wheat season begins in August. So suppose a couple of days before the harvest, you show up in one of those green elevated towns in the Midwest, and you have a truck full of wheat, and you say, "How much to fill up this truck full of wheat here?" Well, the guys that are, cleaning out the equipment and the silos and whatever probably laugh at you. Nobody has any wheat 2 days before the harvest.
Right.
The last truck left, yesterday morning. It's on its way to a brewery right now or a bakery somewhere, 300 miles away.
Right.
But so they're just going to laugh and say, wait, buy a September contract, boy, and you know, you can buy it for $3 a bushel or whatever. But
Right.
if you take out a wad of $100 bills, you say, "No, I'm serious." You might pay $15 for that bushel, and if you do, then someone's going to make a phone call probably to that truck and turn it around and pay that truck more profit to come back and deliver the wheat to you than
Right.
to deliver it to its original buyer, intended buyer. And so that spread between a September contract, $3 in my hypothetical example, and if you want to buy it spot right now, cash on the barrelhead, um, $15.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Is inverted, right? Normally, the price of a futures contract should be higher
Right.
because there's an interest rate to be paid and storage and insurance and all that. The fact that that's inverted, that if you want to wait until September, it's cheaper than spot. That's called backwardation, and
Okay.
that's an indication of a shortage or scarcity. And so that's a trade anybody could see on their screen. $3 September, $15 spot. Now my numbers are made up. That's not how it would be in real
Right.
life. But just to conceptually give everybody the idea of it, that inverted spread, that backwardation indicates a shortage because nobody can take the spread and arbitrage it. And arbitrage is both a profit and crushes that spread. The more
Right.
people that are simultaneously selling spot and buying September, that should pull that spread in. Because selling spot will push it down, buying September will pull it up, and people will do that until there's no longer a profit to be made, or until there's no longer any wheat to be sold. Right? Because in order to sell spot, you actually have to have wheat.
Right.
Right. And almost everything in the financial world, all you really have to have is credit. And credit is generally abundant with, punctuated by crises every once in a while. Um, but availability of wheat is not necessarily abundant. And the day before the harvest, obviously not.
Right.
So, like conceptually, backwardation means shortage or scarcity. So, what we're measuring is how, and conversely, if September were $15 and spot were three, right, that's telling you the opposite, that there's plenty and plenty of wheat on the market. But in some future months, the price is much, much higher. So it's very abundant. And that's a signal to people to put on that trade, buy spot, sell not just September, but sell December, sell February, sell April, right? And that's saying that wheat is abundant, but there's demand in the future. So warehouse it.
Right.
So the opposite of backwardation is contango, and that's a signal to warehouse it. It's abundant, and backwardation is a signal de-warehouse it. If any was in the warehouse, pull it out because it's scarce. Um, so we're measuring how the scarcity versus abundance is moving
Right.
relative to price movements to try to figure out.
Where gold's going to be.
Well, it's not a prediction. It's not saying where it's going to be, but
Right.
it's trying to figure out where the price would be balanced, assuming you took the speculators out who can really distort the price
Right. Right.
rarely. We're trying to back them out and saying this is where it would be. Okay. So that model, as I said, for gold, the last time you and I spoke, it seemed like that was a couple of months ago, but my sense of time is a little skewed.
It was about
Uh,
2 months ago.
Having been in Dubai and then London and then home. So in 2 months, um, if you want, I can share for the readers what the graph looks like. Should I do a screen share? Do you want me to share it right
Yeah,
now?
yeah, absolutely. Here, let me
Um,
give you sharing
okay.
abilities right away. Okay, you can share right now.
Okay. So how do I
Yeah, because I think it would be awesome to get the readers and everyone in Wall Street Silver to get, I guess, like a nice visual of what you're kind of thinking and seeing from 2 months ago.
how do I do a screen share in
You
this?
just click share, the green share.
Oh, there we go.
There you go.
Okay.
There you go. All right. Yeah, I see the gold fundamental.
So what's happened is now leaving aside, I don't know if you can see my cursor.
Yeah, I can see it.
There's a spike low here.
Right.
Let's just assume that's spurious. Right?
Okay.
What we can see is a trend from December 4 when we had just under, and it had been for quite a while in this range of 28, 2,900, 3,000, going back to September. And all of a sudden, after December 4, it's just dropping. And even leaving aside the spurious thing, there's clearly a big trend across the month of December.
Going down.
And here we are right now at 26, what I said, 37 or something like that.
Right.
Um, so dropped like a brick. And what that means is, relative to its price, there is a growing contango. So the spread between futures and spot has moved up. That is, there are more and more people buying in the futures market, less and less buying the physical, and that could just be end of year stuff.
Right.
It's easier to trade futures on your screen, but the buyers are physical or on holiday or whatever the case may be.
Right.
Um, but now, when you see that, by the way, uh, ultimately the people that are buying futures, at least the ones that are speculating, there are users in the futures market that are all about hedging and other, um, non-speculative purposes.
Right.
But the people who are speculating, people who are buying futures to bet on its price, that's generally a short-term position. There are costs involved in being in the futures market. you have to pay that contango for one thing, and that's a very real cost.
And they can't do it for a very long, long time.
Generally not. And then, of course, you're playing with leverage. So
Right.
if you're playing with 10 to 1 or 20 to 1 leverage, that's not a position that you just buy it and, close your account and come back next year and see how I did. If it moves against you, you can get wiped out very quickly. And if it moves in your favor, you're going to want to take profits and close it and not give it all back to the market
Right.
two trading days later. So that, buying in the futures market can hold the price up, but it's not a durable, price move. Whereas people who buy metal, no one buys metal to turn around and, for speculative reasons and turn around and sell it tomorrow.
No.
Someone buys jewelry, they're planning on holding that for a good long while, if not, legacy past to their kids.
Right.
So that's another way to look at it. When the price at the futures market is higher than the spot and rising relative to spot, it's not a good sign for where, what the price is likely to do next. So I'm going to
Right.
stop sharing that.
Okay.
I can pull up the one for silver. Um,
Yeah, it would be nice to get a nice view of silver as well, because we've seen it now with gold that you showed us, but yeah, we'd love to see the silver.
so here is silver.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking. Oh,
Not
so
quite the same drop as a brick, but
but you still see
silver
the drop.
decidedly it's dropped a bunch. And again, here's the spike low on uh, December 4.
Right.
So it's interesting that both metals are behaving the same on that one day. But
Right.
conceptually, that looks like a spike low. Take that out, filter this a bit, if you will. Um, and what we see is that at least since roughly around mid-November, the
Right.
fundamental price of silver is below the market.
Right.
So silver decidedly a more bearish picture, or a lot less bullish certainly than gold. If you remember where gold was here, 2,900 and change, way above the market, and silver not so much.
Right.
Now silver, we have the fundamental price of $28 and call it 41 cents as of Friday.
Mm-hmm.
Um, so not a good sign if you want to bet on the price of metal, at least in the short term. Longer term, I think this is a blip. This is noise. This isn't going to matter. I think we're in a very funky world where a lot of funky things are going on. Oh, this also could be presidential politics. Oh, Trump is going to come save us, whatever.
Even Canada's falling apart with their with their government, debt out of control.
Right. And then, look at Europe as a mess.
Yeah.
Um, And I spent most of the year talking about the four worlds that converge in Dubai and why they're all relentlessly buying gold. You have the Turkish world where the lira is absolutely, um, a bottomless pit that the currency is falling into. The Indian world, now it's not imminent hyperinflation in India, but um, the Indian currency has never been good. I think the Indian currency falls on average something like 7 or 8% a year against the dollar.
That's crazy.
Against the dollar. It's not like the dollar is rising,
That
so they
is
always buy
crazy.
gold. The Chinese yuan, um, the people in China don't trust their government and they don't trust their currency. And they dump as much of it as they can, which is highly illegal. I mean, you can go to prison, and prison's a really bad place to be in China, especially if you're doing something they deem to be disloyal, like
Right.
dumping your currency to buy dollars. And they're all doing it because they all distrust their currency. And then finally, of all four of those four worlds, the only one that's really remotely an anti-dollar play would be the Arab world.
Right.
Arab currencies are generally pegged to the US dollar, but unlike banana republics of Latin America, the Arab pegs are stable generally and have been stable for decades. It's not like anybody has to worry in UAE or Bahrain or whatever that they have to
No.
worry that tomorrow morning their currency is going to be 50% devalued. It's not
Yes.
like Argentina or one of those countries. but
Right.
yet the gold buying is relentless because of the part of there are like Egypt as a terrible currency. But I think there's an anti-dollar play there. They live on the dollar in a way. Their currencies are pegged to it. I mean, it's effectively a dollar proxy. Um, but they don't love the dollar, at least its monetary policy, and they don't love U.S. foreign policy. We'll see what, there's a lot of cheering about Trump, but we'll see what they think when tariffs and other things adverse to their interest really, come in, what that's going to look like.
Yeah, you absolutely nailed it, Keith. And I mean, even because we were speaking about this last time you were on about how the Middle Eastern world, or like in Turkey, they view gold and the businesses use gold completely different to the Western world. Like you were telling me how they actually use gold in their businesses and their portfolios and their books.
Yeah, totally. They're way ahead of us in the U.S.
Right.
Turkey, gold using businesses keep their books in gold, and then they only pay taxes based on how much more gold they made during the year, rather than the fact that the gold price in lira could have doubled,
Right.
or gone up by 5x or whatever it is. So imagine you have 1 million lira worth of gold at the beginning of the year, and you're trading back and forth, and you have 15 million lira at the end of the year. You don't pay tax on 14 million lira gain.
Just the five.
Well, you look at the fact that you went from, if 1 million lira at the beginning of the year was 100 ounces of gold, and 15 million lira at the end of the year was 110 ounces of gold.
Oh, so you just
You only had a
like
10-ounce gain,
right, right.
and
Oh,
then
that's so crazy.
right, and then convert that to lira, and that's the tax you pay. So they recognize that the currency is not a reliable measure of anything. Now in the West, that idea is so radical. I don't know if your readers are able to understand that issue because you're trading back and forth. You're buying and selling. That at the end of the year, it would appear that you had a 14 million lira profit,
But you
but the
just had a
lira has
10
fallen so
ounce,
much.
but you just had a 10-ounce increase, and that's what you would pay
Right.
taxes on.
So that proposition is so radical that I had some discussions with kind of a libertarian group that was invited to advise a free zone that a country was setting up. I don't want to say where, and
No worries.
um, I want to protect the names of the people involved. But I wrote a little position paper saying that, okay, look, however you do your taxes, you should allow people to make an election to keep their books denominated in gold, grams or ounces, for this exact purpose, right? So if the gold price is rapidly rising and someone in the gold trade were buying and selling, it would appear that they had a big paper gain, and the taxes would be greater than the actual gain if you look at gold, and therefore nobody would run a gold business in your jurisdiction
Right.
unless you allowed an election that they could keep their books in gold and then pay tax only on the increase in gold ounces, pay that in gold. And the West is so far behind Turkey that this idea was not understood by the economists involved in advising this free zone. So these are libertarians, people that are very nominally receptive to gold,
Right.
and economists, people that should be able to grasp the concept of numeraire or unit of account, that if I keep my books in gold, it's going to look different than if I keep my books in dollars or pesos or whatever.
Right.
And they couldn't grasp the issue. My paper fell flat because they didn't get what the issue was.
Yeah, that's crazy to
And
me.
and in Turkey, this is actually practice.
Yeah, see, they're way
This-
ahead. They're way ahead of us.
yes. How do how do you explain that to people and say, this is the attitude in Turkey versus here? And how do you say, well, how far ahead is Turkey? They're pretty far ahead when it comes to gold.
Yeah, that's
Now,
abs.
when it comes to monetary policy, they're so far behind, which is what that's the unfortunate flip side. That's why that's the cloud which has the silver lining, no pun intended, that they understand gold is because they're forced to understand gold because their currency is so bad. Whereas
Right.
in America, we're not forced to understand gold because our currency has been tolerably reliable. And I certainly don't want anybody to think, oh, Keith, there he is. He's defending the Fed. He's a paid shill. Jay Powell has got my Swiss numbered bank account on speed dial. Lest anybody thinks that. I'm not saying the dollar is good. but it's
Right.
been tolerable.
Compared to other
People who
currencies
kept their
around the world.
savings in dollars have not been wiped out, despite everlasting, predictions of dollar hyperinflation, which hasn't come true. The dollar has been okay.
Compared to like a Venezuela or a Turkey or other
Or any of these
currencies.
countries. And,
Yeah.
if you say, well, the dollar had its crisis too. Yeah, okay, when is that? Well, late 1970s. Yeah, that's right. And I was a kid in 1979, but I remember it. Inflation, the official number was 13%. And
Right.
you could argue, well, shadow stats, it was really a lot higher. Okay, fine. But going by the official number, because that's how the other countries go by theirs as well. If you told people in Turkey or anywhere in Southeast Asia or anywhere in Eastern Europe or anywhere in Africa or anywhere in Latin America, we had a crisis once in our currency, and they're, oh yeah, what was that? 13%.
They'd
No,
laugh.
per day? No, 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 per year. Oh, per year. Oh, you think that's a crisis? That's cute.
Well, you're absolutely right. I don't think the Western world or the US has experienced quite a crazy dollar. Like, yeah, the dollar hasn't collapsed compared to other currencies around the world. But I'm sure there's a day soon coming, Keith, where you never know. Maybe it could be 50 years, 100 years, maybe even earlier, that I'm sure the US dollar will have some crazy instability where they'll look at Turkey and be like, oh, these guys are ahead of us when they're doing their books in gold.
Yeah, I think not relative to the other currencies. It's a dollar world, and for a variety of reasons, all of them perverse. Um, the world uses the dollar, and I just had some arguments on Twitter over the last few days, about all this. What gives the dollar, its value? And the standard answer from the modern monetary theorist people, and I have to pause and say, MMT, so-called, is not modern. It's not a theory, right? A theory is an explanation of what you observe about reality.
Right.
MMT is not a theory.
Right.
It's a bunch of socialist magical thinking.
Yeah, you print more
Uh,
money, you solve all the problems.
because it starts out with the premise, if you read the seminal paper of Warren Mosler, going back to 1995, the very first thing it says is that there's idle resources in the economy that the government can more efficiently manage.
Ah,
Right there is the socialist central planning premise, which we Austrians have known was wrong, at least going back to 1922 when Mises wrote his book, Socialism. We know that the central planners can't get it right. Anyway, that's the starting premise of MMT. But they assert that, and like with so many things in MMT, um, it's either not the profundity that they say that it is, or it's not true, or both. So they say that the thing that gives a currency its value is the fact that you have to pay taxes in it.
right.
Now I can tell you, monetary metals, we do everything in gold, and we earn our fees are in gold. We don't get a
Wow.
dollar income. No one pays. We don't send an invoice past $1,000, right? When we do a gold lease, we get paid a lease fee, which is ounces
Wow, that's
from the lessee,
fantastic.
from the jeweler, from the refiner, whatever. We're paid in ounces, and then we pay ounces to the clients who put up their metal for lease, and we keep a difference, a spread, which is ounces.
Wow.
And
So it's
so,
not dollars.
not dollars at all. We don't have a dollar income. We have a gold income or silver income. Now, to pay taxes, what do? Wait until the last minute and sell a little bit of metal because you have to remit dollars to the IRS, right? But we
Right.
sell we sell metal and then to remit taxes. So what gives the currency value is not the fact that you have to remit taxes in it. It's your choice of what to hold the entire year.
Wow.
Not what you buy in the instant before paying the taxes by sending a wire to the IRS. It's what you choose to hold all year. And the fact that you pay taxes in it doesn't make anybody choose. In fact, all the currencies I just described, the ones that are failing and falling, you have to pay taxes in those currencies. In
Right.
every failed hyperinflated currency ever, you have to pay taxes and had to pay taxes in that currency. So
Wow.
that's not what gives a currency its value. What gives a currency its value, right? Most people think of the value of a currency as what? It's purchasing power. Roughly 1 over P, which P is the price level. That's how people think of the value of a currency. What can I buy with it?
Right.
Now, every producer of everything has dollar denominated debts, whether it's the chips in your computer, whether it's the food that you eat, the coffee that you drink, the car that you drive, the fuel that you put in your car, right? All those producers and all the distributors, the shippers, the truckers, the pipeline operators, right? They all have dollar denominated debts. That's how they finance their businesses. Now, if you owe dollar debts, you must get dollars with urgency, which means you must produce as much of whatever it is that you produce. You must produce as much of that as possible, dump that on the bid price, the dollar bid price for your goods or your services, in order to get dollar revenues, so that
Right.
after you pay your expenses, net profits, that's the only way you can pay interest expenses is after when you have a profit, comes out of the profits. Um, so that you have enough net profits to service your debt. Otherwise, the bank or the creditor takes your business, takes all your assets.
Right.
So there's a real urgency, and so it's the struggles of the debtors that give the value to the currency, and very perversely, but also very truly, everybody who produces anything is in debt up to their eyeballs in dollars.
Yeah, absolutely.
So they make a relentless and ferocious and growing, because the debt is always growing. Therefore, the bid on the dollar is always growing. They make a ferocious and relentless and ever-growing bid on the dollar. And we wonder why the dollar hasn't collapsed yet. Well, that's why. Now,
Wow.
eventually the dollar is going to fail in the end, but it's kind of like I like to use the analogy of you have an old house with a fuse box, not a circuit breaker panel, and your daughter plugs in her hair dryer, and you're baking a Christmas roast, a turkey, you have all these different things going on, and
Fuse is
eventually
gonna go
the
out.
fuse burns out. So you go
Right.
down to the basement and you replace the fuse, and then you come back, and 10 minutes later it burns out again. Only now you don't have any more fuses left, and it's literally the night before Christmas.
Oh my
And
goodness.
right, so you can't go to the hardware store to buy another fuse. So what do? You put a penny in the fuse box.
Oh,
You
okay.
shouldn't do that, but people might do that, right? So how does that correct itself? Does the dollar experience, or does the house experience a little bit of inflation? Is there a gradual adjustment of some sort? No. The failure is what? The house burns down,
Right.
right? When the thing is overloaded and finally can't take it,
It'll
then you have the
collapse.
fire.
Yeah.
It catches on fire, and the whole house is burned down. And that will come in the end, but you can see why it's so resilient, because there's so many debtors that are so relentlessly bidding on it. There is one thing that can replace the dollar, and it's not going to be the BRICS currency, so-called, the Brazilian real, the Russian ruble, the Indian rupee, the Chinese yuan, the South African rand. These are joke currencies, number one.
Right.
And number two, they're so bad that the governments have to impose capital controls,
Right.
prevent their people from dumping them, which is what they would do if they had the choice. It's not going to be those currencies, and it's not going to be a basket composed of, some weighted average of those currencies. Imagine you had an aircraft carrier, and that's the dollar, and whatever complaints you may have, and it's rusty and it's creaky, and maybe there's a few leaks in it. And
Right.
then you had a flotilla consisting and they're all leaking, by the way, but you have an inner tube, an air mattress, and a half rotten log, and a lawn chair, and one of those styrofoam beer coolers, and then you had a flotilla of all these things. Those are the other currencies, and the aircraft carrier is the dollar. And meanwhile, everybody in one of those other little floating things, a dinghy, a kayak, um, they're all sitting there imagining they're going to replace the dollar one day as they look up the aircraft carrier, which is, 10
Just
stories above
massive.
them. Yeah.
Right.
And no, there is one thing that'll replace the dollar in the end. It's gold.
That's the only thing.
And ain't nobody want that. I always keep saying that, because that's the perversity of it. Even the friends of free markets, George Selgin, I like to pick on him. He deserves it. And he wrote this long position paper for Cato Institute or the Cato Journal one year, in
Okay.
which he was very good at going through the history of what happened, and free banking and all these different things. He's really good on his history. And then at the end, he's like, well, as to going back to the gold standard, it would hardly be worth it. And besides, wouldn't get everybody to agree on the right price of gold. And that was kind of like the end of the paper. I'm like, wait a minute. Did you think the gold standard is when the Fed sits around and sets a fixed price for gold? That's your idea of the gold standard? Well, you just spent all this time writing about this, you do know that there wasn't a Fed before 1913. We had a
Right.
gold standard before 1913, but not a Fed. So clearly the gold standard wasn't when the Fed fixed the price of gold.
Right.
It was something else. And anyways, that's the state of the world today, is that nobody wants gold as a monetary system, and not least of which the governments of Brazil, Russia, India, China, South Africa, they don't want a gold standard either.
No.
So I always love the quote from Winston Churchill when he says, God bless America. And this is one of those backhanded, compliments. God bless America. After they've tried everything else, they'll do the right thing.
Yeah, that's
In the
that's a great
spirit of
quote.
that, God bless the world. After we've tried everything else, we're gonna try gold again. And that's what monetary metals is working on, right? Is by giving people a way to deposit their metal and earn interest on their metal and metal, we're helping the world rediscover, the virtues of the gold standard, and hopefully trying to recreate it if we can get enough business to be financed in gold rather than in dollars, right? That's the transition that
That's the great end goal for and I think that's what would fix everything.
fix a lot of things. I mean, I'm not
Yeah.
a believer it's a panacea. I think the world had problems in the 19th century when we were on gold. The world will have problems when we return to gold, but it'll fix it off a lot of stuff. The idea of this all-encompassing, all-powerful totalitarian state was not possible in the gold standard because you couldn't finance it.
Yeah, you couldn't finance it until you got rid of the gold standard and then just debt till the sky's the limit.
That's it.
Yeah.
So, that's the thing that's going to replace the dollar when the dollar fails in the end. I wrote an article, I guess about 12 years ago, I think it was 2012,
Mm-hmm.
called When Gold Backwardation Becomes Permanent. So unlike wheat, there never should be any such thing as backwardation in gold because there shouldn't be any such thing as that scarcity. Wheat, of course, is consumed, right? So the day before the harvest, all the wheat is basically eaten up.
Gold is not
Gold
consumed.
is not consumed. There should never be backwardation. And yet, in the days of the financial crisis, intermittently for many years thereafter, there was an intermittent gold backwardation, which we don't have at the moment. I want to hasten to add that. But the
Right.
fact that it kept recurring was a real problem, and that's the harbinger of the collapse of the dollar in the end. Everybody should read that. Probably my most important article. Very bleak, very grim. To anybody who
Well.
thought I was shilling for the Fed, read When Gold Backwardation Becomes Permanent. You will no longer think I'm a shill for the Fed
You're not a
because
shill for the Fed.
it's a very bleak scenario that I'm talking about. What collapse actually looks like. Um, but gold is going to come back one way or the other. But we have a choice whether it comes back via a new dark age, right? So Rome very famously clipping its coins and debasing them to the point where, in the end, the precious metals content was all but gone.
Right.
And then Rome collapsed in 476 AD. At least the Western Roman Empire did. And sure, that fixed the problem. We didn't have debased coinage after that. But what we had was a dark age where the population of Rome collapsed from over 1 million people to about 6,000 people.
Wow.
And it was a horrible calamity. I mean, anybody who was alive during that collapse probably wished they weren't. And most of them got their wish. It was a
Wow.
horrible calamity. And then for the better part of 1,000 years, humanity in Europe had degraded to a level much lower than what they enjoyed in Rome. And, you look at Rome's engineering achievements basically weren't rivaled until the Industrial Revolution.
Which is insane.
I'm thinking of like, the big engineering works and Portland cement.
Wow, that's it. That's insane how it took that long to have that.
Yeah.
Yeah, that's
So
incredible.
yes, money was fixed, right? After the collapse, money was okay, but that was not exactly what you call a graceful transition. What
Yeah.
I would like to see is a graceful transition, not
Collapse.
a catastrophe.
Yeah.
And post collapse, sure, we're using gold, but our kids will be using gold, in a very crude barter, versus we have a pretty sophisticated economy right now.
Yeah. No, Keith, so grateful for you coming down and sharing this wealth of knowledge with all of us at Wall Street Silver. I am going to put the links in the description below for Monetary Metals. I highly recommend everyone to check out Monetary Metals. Check out Keith's socials. Are you just specifically on X, or where else are you on for social media?
I'm on Facebook as well, but that's not really where I put my monetary content.
So
So I'll
mostly
just say
X.
at Real Keith Weiner, and that's KeithWeiner. There are, I'm not even really trolls. I guess you call them identity thieves that will misspell my name Kieth or Wiener, and try to steal followers that are looking for me, and they steal my picture. They even repost some of my posts and other things.
I'll put your
Uh,
actual link to your
yeah.
X right in the description below. But again, thank you so much, Keith, for coming down to Wall Street Silver, and I'd love to have you back on soon.
All right, thanks for having me.
Talk to you soon.